How do you fail at real estate today? There's so much uncertainty that's out there when it comes to investing in real estate. It's almost as if people are looking to wait and see what's going to happen. Today's real estate market is not only just insane, it has been inflated. The market has gone up. A lot of people have made a lot of money, and I want to show you how you can fail today at investing in real estate and not be one of those people making money. So let's get after it right now. Hey everybody, I'm Tarl Yarber with Fixated Real Estate. Now let's go over how you're going to fail in today's real estate market. Now first, what is the real estate market? Well, I got news for you. There is no real estate market. There's a real estate markets, right? Each city is its own market. So a lot of us hear the real estate market, the real estate market. Well, that's most people trying to overemphasize the national size of the real estate market. There is no national real estate market. There are cities, geographies, regions of real estate markets. Now that said, Austin, Texas, very different than LA, California. LA, California, very different than Tucson, Arizona. Springfield, Illinois is very different than Chicago, Illinois. Each city, each state has its own markets and they're all different from each other. Just getting that out of the way. So when it comes to today's real estate investing opportunities that are out there and how you can fail at today's opportunities is over exaggerating what the real estate market is doing. So step number one, focus on the specifics of your real estate market or the market that you're investing in. You want to fail at this business? Get outside of that and get overly focused on the national level of real estate instead of focused on the specific level of the real estate market you're in. Each real estate market has its own fundamentals. Each real estate area has key things that have opportunities in it, whether it's looking at job growth, looking at the opportunity for new build. What is the supply and demand of that area? Are there new opportunities coming up? Right? Certain cities in today's market have a lot of job growth going towards it, and other cities have a lot of job growth going away from it. Are there areas where there's colleges that are up and coming? Are there specific spots where you know that maybe a Walmart's gonna come in because for whatever reason, real estate market goes up where a Walmart is? Side note. Do you know what the opportunities and what the plans are of your city and the continuous growth? Are there builder opportunities in the market that you're in? These are all fundamental keys to any real estate investment strategy. And the further you get away from those and the more you get focused on the global and not the specific micro area that you're in, the more challenges you're going to have in this upcoming real estate market. Your next guaranteed way to fail at the real estate market today is panic. Now, why would you panic? Well, I got some things for you. Rates are rising. So rates are going to continue to rise. So if you're expecting rates to level out and stay the same anytime soon, right now it's May 2022, they're not. The Fed has already said that they're going to continuously raise rates. Now, the Fed can't astronomically raise rates to a point where it completely shuts down the market. Fed can only talk about raising rates and threaten raising rates as much as possible, which also helps combat inflation. If the Fed continues to raise rates and keeps astronomically crushing it with the rates and getting them up there higher and higher, and keeps saying they're going to, not only just saying they're going to do it, but keeps pushing it up there to a point, it'll break the entire economy. Now, what do I mean by all that? It basically means that if you're investing in real estate today and you expect yourself to get the same interest rate that you could have gotten back in 2021, you're going to fail at this business. If you're investing in real estate and you're expecting your rate to be the same 6 months from now to where it is today, you're probably going to fail at this business. I speak from a lot of experience on this. I recently have completed a number of BRRRRs, buy, rehab, rent, refinance, repeat. And when doing those sort of things, I bought a lot of those properties back in late 2021, expecting my interest rate maybe to be 4 to 4.5% annualized when I go to refinance the property at the end of the BRRRR. Well, lo and behold, right, my rates now went up to 5.5 to 6.5%, depending on where they are and the type of property they are in. If I didn't have a good fundamental strategy when I bought those properties and the fundamental math that I did to buy those properties to make sure they're good, then when those rates increased as much as they have, it would have destroyed my cash flow and hurt my chances of keeping the deal. Now, if you're investing today and you're just starting out and you're just getting after it, and you can get a 5.5% interest rate and you're thinking you're going to get less than that, or if you're not planning on analyzing your deal to be a higher interest rate on your takeout financing at the back end, then you might fail at this business. So judge for the worst, plan for the worst, expect interest rates to go up. Everybody's telling you they're going to go up, including the Fed itself. So plan on that. Now, going back to panicking, right? One of the best things to do to not make money in this business is to make lots of emotional responsive decisions. Rates have gone up. We talked about that. Supply is an issue. We're not going to talk about that right now. We're going to talk about that later, but supply is an issue. Your costs are going up. Construction costs are going up. Supply chains issues, right? Your money is invested in these deals, and it's very easy to get emotionally invested into these transactions. Or on the other side of it, you get emotionally excited about watching everybody else make money in real estate. Both are bad. Getting emotionally panicked and emotionally excited does not keep you an even person to make rational decisions, especially in today's markets. So how do you balance that all out? It goes back to, once again, real estate is math, the fundamentals exist, and when you have a problem in this business, you must deal with what is, not with what isn't. Always deal with what is in front of you and what is actually happening, not what you wish could be happening. Now, you can plan, you can make decisions, you can make stuff as best as you can. We do everything in this business to do educated guesses, mitigating risk, and do the best we can to execute all the plans we come up with. But stuff still happens in this business. Markets change, things fluctuate, supply chain issues, rates going up, whatever, supply being an issue in general, just as far as demand is concerned with the real estate, yet we have to act with what we have. Now, if you've already bought a property, that's like jumping out of an airplane when you go skydiving. I love skydiving, I've done it many times. And once you jump out of that airplane, you can't jump back in. So you have to deal with the property that you have today. Luckily for you, I think you're going to do just fine if you continue to focus on the fundamentals and you bought that property right. If you didn't buy it right, I'm sorry to say, you still got to deal with it. So make the best decisions, the most rational decisions that you can in today's market to be able to either get out of what you've got or find better opportunities for the future. Which leads me to the next way that you're guaranteed to definitely fail in today's real estate markets. And that is to expect everything to be the same as it was, especially the last 10 years. If you started investing in real estate over the last decade, you've seen nothing but an uptick. You've seen nothing but a go, 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 equity high, lots of real estate, people making money, right? Flips are doing great. There's tons of demand, interest rates going down, right? You think everything is good. You've never seen a downturn. Now, I'm not saying that the real estate market is going to have a downturn, but I am saying this. You can't have what we've had over the last 12 months, which in most markets, a 20 to 30% appreciation in all real estate across the board, in almost all classes of real estate in a 12-month period. That is not sustainable. That is not expected to continue to happen for the next few years. In fact, it's not expected to happen again right now. Now, if you're expecting that to continuously happen, you're going to fail eventually in this business. So don't expect what has happened in the past to continue to happen in the future. But then again, if the market had a shift, let's say it shifted 10%, it went backwards 10%. Well, in my belief, it shouldn't have gone up 30% to begin with in the last 12 months. So if it still comes back 10%, you still have a pretty good return, especially if you bought the property a little while ago. Now, another way that you are definitely going to fail at this business is if you're thinking short term and not long term. It's the difference between being an amateur and a professional in this business, in my opinion. Now, I'm speaking from personal experience on this. I have flipped over 600 houses in my career, and I have always thought short term, which is why I flipped so many houses. We've made a lot of money doing it, but my future self hates me because I flipped all those properties instead of keeping them. Today, I'm shifting my mentality. I started shifting my mentality a few years ago to think longer term. When if you're getting in real estate today, how can you plan out 5 to 10 years out in your real estate investment career? Real estate might go bad for whatever it is in the short run, but in the long run, US real estate has always panned out. If you're thinking 5, 10, 15 years out, just wait. things will always get better. In a 10-year run, if there's a 2-year downfall, then you have an 8-year upside. Long run, not so bad. Short run, might be a little bad. Who knows? But if you're expecting to do this business and get in and out of everything in 3 to 6 months, you might want to be thinking of different exit strategies that allows you to hold onto the properties a little bit longer and go back to the true fundamentals of this real estate business, which is thinking long term. Does that mean you can't flip houses? Absolutely not. There's plenty of great opportunities out there to flip houses, to wholesale deals, and so forth. But there's also going back to the fundamentals and thinking, how can I not only flip this house, but can I keep it or find a way to make the deal structured to where keeping it makes sense as well, just in case. Another thing on expectation, something that we're finding already, the market is slowing down in certain markets. A lot of the high-end market, a lot of areas that I invest in as well here in the Seattle market have stalled slightly. Now, what does I mean by that? I've expected over the last few years, all my houses, when I put them on the market to sell them, I expect to get 5 to 10 offers within 3 days. If I don't get 5 to 10 offers within 3 days, I am panicking. Is that a normal market, ladies and gentlemen? I don't think it is. In fact, back when I first started investing in real estate many years ago, I'd put a house on the market in Tacoma, Washington, and I expected it to be on the market for 45 to 60 days with maybe one good offer. That was my expectation over 10 years ago when I was investing in Tacoma, Washington. Today, I expect to have 20 offers within a few days, and if I don't, then I'm losing money and everything's bad. Not the case. So reset our realistic expectations. So let's go back over to that. Expect a different expectation. If we just go back a few years ago and go back to our normal expectation to where it is, we might be okay going into the future. So when I put a house on the market today, maybe I don't expect 20 offers. Maybe I only expect 2. Maybe I'll get lucky and get 3, but I don't expect to get 10 plus like I used to get, because that's what a normal market would do. An additional way that you're gonna fail in this business is to focus on a normal market. At this point, we're in unwritten territory. Nobody's been in this territory before, especially in the real estate market in the US. We don't know what is normal today. We don't know what normal is going to look like. The best we can do is go back to what I've said over and over again on this, is go back to the fundamentals. Where's the job growth? Where's the potential for the best markets to invest in? You're not a tree. You don't have roots. You can't invest in other markets beside the one that you're in. What are the fundamentals of that specific market to be? Are they going to be good over the last 10 years, over the next 10 years? Are they going to be able to continue to go up? Are they a strong place for you to invest in? If we go back to that and focus less on what normal is and more on what the fundamentals are, the better you're going to do. And finally, one of the most important final messages I have for you to guarantee your failure in the real estate market, and that is to listen to all the experts on social media. Now, sorry, I'm an expert on social media, right? If you're like me, then you're listening to all these people on social media, and not just social media, but also the media in general. And it can be very overwhelming and very confusing. And guess what? Fear sells. Fear bait works. If we go on the media and we look at everything on social media, the algorithms that are out there are designed to keep us engaged, mostly through fear. And there's nothing hotter right now than what's going to happen in the real estate market. And there's never been more experts than there has been today on the real estate market. How many of your friends, how many of your neighbors, how many of your coworkers, how many of your relatives are experts on what's happening in the real estate market today? I'm sure there's a lot of them out there right now. I know I have a lot of them. Everywhere I go, everything I see somebody has a great opinion on what's happening on the real estate market because of interest rates, what's going to happen to the supply, what's going to happen to demand, what's going to happen, is there going to be a crash? It's finally happening, the bubble is here. Well, I got news for you. Most experts, neighbors and true experts, have been wrong over the last few years, especially during the pandemic. The real estate market didn't do what most of us thought it was going to do in March and April of 2020. The real estate market didn't crash like most of us thought it was going to do. The real estate market did not do a lot of stuff that we thought it was going to do. Does that mean that it's not going to crash today? Nobody knows. But I can say this. The more we listen to what everybody else is doing, the more we're getting away from the opportunities. Look for the opportunities. If it's an up market, there are opportunities and niches to find. If it's a down market, almost always most of the money is made in a down market when you look at the opportunities and find the niches because that's where the riches are in this business. Whether it's up or down, you're going to be able to make money if you're looking for the right things. If you're listening to what everybody else is doing and you're listening to all the advice of what everybody else is saying, there's a good chance you're going to not be successful in this business. So listen to what everybody is saying in order to find what nobody is doing. Listen to what everybody is saying in order to find what your niche and find the opportunity and weed through all the details to be able to get to that spot where you might be able to find an opportunity in this business. You couple that with thinking long term, you couple that with thinking with realistic expectations where the market may or may not go, realistic expectations on where interest rates are going to be, realistic expectations of where supply chains and all that stuff are going to be at, you might actually find the opportunity you're looking for in this business. I hope that works out for you guys. That's how you could fail at this business in today's market, and I'll see you on the next video.